Good afternoon, everyone. This is Ashish Kyal here from Wave Strategy Advisors, and welcome again to the Elliott Wave News channel, which we have started a few weeks back, where I normally talk about the Elliott Wave structure of Nifty and markets and the trading strategy that one should be forming going forward. Before I very quickly start, I would again give an update on the training that is scheduled on 14th and 15th March. Only 5 days to go now. It's one of the most comprehensive training that I'll be ever conducting. It's going to be for around 16 hours of seminar on 2 days, 14th and 15th. And prior to that, we'll be providing you with the video series of Elliott Wave, so that you are up to the mark when we start with the Neo Wave training. It's going to be training on Neo Wave plus time cycles plus trade setups across time frames, and I'm planning to cover more than 100 different practical aspects of the charts, which is going to show various different indicators along with Neo Wave or time cycles or an independent study. So it's going to be one of the most comprehensive studies, and please register yourself, and I'll be more than happy to speak on the topic and share across whatever I know so far and I've learned so far over past so many years. For more details, you can write to us at helpdesk@wavestrategy.com, or you can call us on 9920422202. Now let's quickly kickstart with the Elliott Wave news. We have Nifty had a very strong gap down opening today, and prices have broken even below the Friday's low of 8850 level, which was the weekly low. So this is keeping the weekly trend as well as the daily trend negative. Also, if you remember in the previous update, we have said that one leg for Bank Nifty is pending on upside, and the Bank Nifty obliged us by moving very sharply higher, completed the C wave there, and it started moving lower very sharply, equally fast. So the movement on Bank Nifty as well as Nifty has now taken out the previous rising leg in faster time, which has provided the first stage of negative confirmation that an important top in Nifty and Bank Nifty both is in place. Secondly, Nifty touched new high at 9,000 to 120 odd levels, and after that it started moving down. However, Bank Nifty still did not move and touch the lifetime highs, and truncated from middle itself after retracing somewhere around 80%, which was the pattern implication which we had talked about before as well. So this clearly shows a negative divergence between Nifty and Bank Nifty, where Nifty touched new high, whereas Bank Nifty did not. And we can see in today's sell of Bank Nifty is one of the major component on the downside. So the rally which was being led by banks is now banks are leading on the downside. So that is also one of a very important reason why we think that the top which is formed by Nifty is going to be very crucial. And from time cycle perspective, there is a 55-day Hurst time cycle that we follow very closely, and this time cycle is suggesting that price have already rallied for around 34 days, and it has entered into the topping zone. So next 14 to 15 days is going to be very topping pattern, or not topping, but it's going to be downtrend as per the 55 days time cycle, which is an independent study apart from Neo Wave. So what happens if we combine an independent study apart from Neo Wave? We get more conviction and we get a better trade setup in terms of position sizing, and we now know how much to leverage because time cycle is confirming. The daily Bollinger Bands resistance was also at the high where Nifty made around 9,120, and it reversed from there. So daily Bollinger Band was there. Black channel resistance, since I am showing that channel in my daily research report. So we had a very strong black channel resistance which was placed there. Nifty reversed from there. There was Bollinger Band, time cycle confirmed, Neo Wave pattern confirmed. As soon as Nifty broke the level of previous low around 8850, it confirms that each of the up leg is now getting retraced in faster time, and that is a very strong indication that the trend which was upside is reversed. The next point is there was a lot of euphoria as soon as 9,000 was taken out on Nifty and Sensex crossed about 30,000 on the day when RBI cut repo rate in sudden announcement. It was a strong euphoric rise which everyone was expecting. However, on the same day, Nifty filled the gap and started moving lower. So that was again a very strong indication, a negative close on a positive news. is definitely bearish for us. We do not buy in the story of 9,500 plus levels even now, as many have been expecting about it. And the next part is in our recent monthly research report, we published how the advanced decline ratio has constantly deteriorated post the election in May 2014 and has been trading below at the levels of Jan 2014. So advanced decline is deteriorating constantly. The net new monthly highs have been deteriorating since past 6-7 months. So if this is a bull trend, I am not sure how people trade this kind of bull trends, because if the number of stocks that are declining are always higher than the number of stocks that are advancing, it's very difficult to pick up the stocks that are going to go towards new highs. There can be a few heavyweights because of which the index might be touching new highs or mid cap might be touching new highs. However, the number of stocks within that index, more number of stocks have been always on the declining side than advancing, and you pick up a majority of the stocks will be below the levels of their 52-week high or their lifetime highs. So this is also one of the breadth indicators that we use in order to gauge the strength of Indian market. Now the trade setup, as the today's topic suggests, we are going to discuss about a few trade setups. Nifty is down already and is sustaining the gap so far. So over short term, as long as the gap is intact, which is as long as we do not see a move back above and price enter into the green territory, it is better to stay with the short positions, which is currently on downside. Next is if the level of 8750, which is the budget day low, if that level breaks, it will be further confirming the downtrend has started, and a faster retracement below 8670 from where this entire rally started is taken out. I mean, 8470 is not the level we are looking at. It's 8670, 8690, I suppose. That is where the rally started, and if that is taken out in faster time, it's a very strong hint towards a second stage confirmation as per NeoWave that a very important top has been formed on Nifty and the next trend on downside has started. So we are now at a very crucial juncture where lot of other things are getting aligned together. We have Bollinger Bands. I'll again repeat, we have Bollinger Bands, we have Nifty trend which is reverse lower high lower low formation is there. We are seeing a reversal from the daily channel resistance. We are seeing a strong negative divergence on RSI. You put RSI on a Nifty daily chart, you will find a very strong negative divergence. Bank Nifty divergence, which failed to show a higher move above the previous highs when Nifty moved higher. So all these indications are showing that at least the top which is formed on the RBI rate cut day is going to be very important top, at least over short to medium term, and that should not be taken out at least for next 15 days. So if that is the case, and the gap down opening is there, I mean, I think it's a good opportunity to have that gap as a stop loss and probably trade in the direction of the trend which is currently down. And once 8750 breaks, we need to look at the indicators on an hourly chart. If the indicators enters into an oversold position, then we have to wait for some pullback to create shorting opportunity. Or if there is still some room on the short side and 8750 breaks, then that should be another level where more positions can be added. But again, I'm repeating, you have to keep observing whether the indicators enter into the oversold state, because every time indicators enter into oversold state, we start seeing some pullback or some buying activity emerging. So this is how I think Nifty should be traded. We have recently published a monthly research report as well with a very global perspective with views on UK index and covering the stocks and commodities and why everything is now globalized again. I mean, on Friday, Dow Jones were down by 270 points. Can this be the start for US market correcting? It's too soon to conclude that. However, Nifty, if that happens, then Nifty is behaving on the weaker side now over past few weeks in the global markets, and that can take a major hit. So I think that should be it from today's session. But stay tuned. We keep coming up with the video update once in a week in order to identify the trading setup. If you want to keep yourself abreast about the daily developments of Nifty and stock picks, you can subscribe to the daily research report, the Financial Wave short-term update, which I keep publishing in the morning. And in case you want to learn yourself how we are applying these techniques together, I mean, there cannot be a better opportunity than this, than attending the training on 14th and 15th March. As I said, this is one of the most comprehensive training that we are conducting, and I'll be glad to see you there and discuss the various trading strategies and setups that I personally look at in order to find a good trading opportunity on the market. So that's it from me. Thanks for tuning in, and have a great day. Thank you.